All right, so Trump signed an executive order recently that directed the Labor Department to reevaluate its guidance on the 401ks, and we're going to talk about it. My name is Rich Lennon. We talk about welcome to the Growing the Money podcast, where we talk about growing the money every morning, 99:10. Although in a week we're switching back to the 8 o'clock because kids are going back to school. And yeah, so today we are going to talk about that 401k guidance executive order that Trump gave us. All right, so I want to start. I just want to be crystal clear because sometimes I say things and then people get all bent out of shape without really listening to my whole thing. And so I am pro 401k. I think that 401k is the first investment that you should make. If your business, the company that you work for is going to match. So if they're matching 1% or 2% or 3%, or I've seen people get up to 5% of where they match, and that should absolutely be the first place that you put your money, in my humble opinion. I'm not a CPA. I'm not a financial advisor. I'm not an attorney. I'm just a guy. But I want to talk about what the executive order is doing and what is, in my humble opinion, is the purpose of it. And as you might expect, the intent of something like this is to take your money. And to take your money by take your money, I mean, for Wall Street to take your money. And it's an opportunity for Wall Street to earn more fees and on a product that they can sell to the 401ks. So specifically what Trump is having them look at is allowing the 401k to invest in real estate, which is something that we know and love around here. Number two, crypto. Right. And then number three is private equity. And so I want to hit on the private equity a little bit. Crypto, I'm just going to leave it all to the crypto guys and gals. And then real estate, obviously, I am a fan of real estate. I don't think it gets very high returns, but I do love me some real estate. But I want to talk about this private equity that is now on everybody's tongue. And so what this means is you are basically allowing private companies to borrow money. Like when we go into the stock market and we buy a Tesla share, what we're really doing is we're allowing Tesla to use our money, and they use our money to grow their business. And the stock market is used to evaluate how much that is worth, and our money helps Tesla grow, and then we get some type of reward for that in that the stock goes up. But it's like 87% of all the countries in the United States that have over $100 million in revenue every year, they're not publicly traded companies. They're private companies. And so previously, all those private companies have been unable to get monies from the 401ks because of the requirements. So here's an opportunity being presented to the American people and those who run the 401ks, which I'll throw out there. Unless you have your own business or your own solo 401k, these are largely decisions that are made at the corporate level. And so if you're working a W-2 job in corporate, you really can't choose probably where these investments are going to go, but you should be informed about them. So what it allows the 401ks to do now is to seek higher rates of return by lending money to private companies that the private company is going to agree to pay you back a certain amount of money. And so it opens up the opportunity for a lot of business on Wall Street, because the fees associated with these private equity things tends to be more expensive than if you were just going to go out and you were going to have someone manage your portfolio and take a fee. A fee for buying stocks and managing a portfolio like that is around 1%. But the private equity is structured a little bit different. So you don't know what companies to invest in. So you go to a broker, think like a BlackRock broker or something like that, and you go to them and they help you pick out what private company you're going to invest in. So you're going to get a higher rate of return, but then BlackRock is going to get a pretty good fee. They don't get the 1% traditional fee. They get a 0.5% of the fee, but they get about, it depends on the contract, but they get about 20% of the profits that you get from the deal. And in that way, they offer what is essentially a brokerage. And they're taking the access to the $2 trillion that are sitting in the 401ks, and they're trying to generate more income from themselves. And they're offering, or supposedly offering, a higher rate of return. I think there's a lot of a lot of data out there that suggests that it's a higher risk thing and that the rate of return isn't much more significant. And the reason it's not much more significant is because of all the fees that a company like BlackRock takes. So when we see these executive orders, they are really designed to give a large pool of money that is now available to the big wealthy hedge funds so that those big wealthy hedge funds can make more money. That's what's really happening in these scenarios. And I just want to make sure that you're not over getting all excited about being able to go into private equity. What I don't like about private equity, and I'm all about loans. I love loans. We talk about them here all the time. But when you're loaning on a private equity, you are loaning to a business. You're loaning, there's nothing secured that is secured by that asset. It is a company, and that company is either going to pay you back or it's going to go broke. One of the two is going to happen. So there's a chance that you lose not just some of your money, but there's a chance that you lose all of your money. And while I love to lend money, I don't like it because I'm lending to like an corporation, I'm lending to a company. I'm not lending with something that's backed by any hard asset. And that's the real difference between a private equity and like a private money loan. And I know that we talk about private money loans here a lot, but here is an example of where that private money loan on a real estate backed asset is much more secure than what they're going to try to do with your 401ks. Now, you don't have access to your 401ks maybe until you leave the company, and then maybe you can move your 401k, and ultimately maybe you can self-direct your 401k. But a lot of these investing techniques already exist in the self-directed world. In the self-directed world, you can invest in crypto. In a self-directed world, you can invest in real estate already. In a self-directed world, you can certainly invest in debt. And so I would encourage you, after you've made your full contributions to your 401k, you really need to start making those contributions to your IRAs, preferably your Roth IRAs, and learn how to grow that money inside those Roths without Wall Street taking all of those fees that interfere with your ability to grow that money. I'd also like to say that when you take control of it yourself, you structure your deals correctly, they are typically backed by real estate at a 60% or 70% loan to value so that if something goes wrong, you still have an opportunity to recover your capital. And even in the situations where you might lose some capital, as long as you follow the rules of making sure that your title is correct, that you have the correct insurance, it's hard for real estate to go to zero because there's land there. And it's just hard to lose it all. Again, I'm not a CPA. I'm not an attorney, and I'm not a financial advisor. These are just my experiences in the world. And that's why when I loan, like to lend based on a real estate. And then if something goes wrong, I take it back. When I'm investing in the private equities market, there is no recourse. There is no opportunity for me to get my money back until that company is ready to give me my money back. I would encourage you to take control of your future. Take control of your own investing. Get yourself educated. We educate here every morning. You can go to my website at richlennon.com, download the Smarter Wealth Blueprint, and just check out what we're doing with debt. There's free. It doesn't cost anything. It's simply there for your education. All right. My name is Rich Lennon. Don't get distracted by the newest, cutest thing that Wall Street and our government is going to put out there because it really is just there to create more fees for a company like BlackRock. All right. I'll see everybody tomorrow.